The last market report we did for June showed that while the seller's market persisted due to higher sales prices and low number of days on market, contract activity was declining at a higher rate. June's annual contract activity showed negative gains that were larger in size compared to May's numbers. However, there was a small glimmer of hope that inventory will increase as time goes on since June reported a positive monthly gain. Will the median sales price continue to increase in the face of declining contract activity? Will inventory continue to increase? Stay tuned for July's market report. Quick disclaimer, there are other agents doing market reports for Las Vegas. You might see different stats in the categories discussed in this video. Agents across Las Vegas have different sources, and those sources might have different data. For transparency's sake, I will link all the links and all the sources I have used personally to create this video market report in the description below. First up is the median sales price. July clocked in at $405,000, which is a $5,000 increase over June. Year over year, the increase has been marked at an impressive $73,000. These equity gains seem to go in the face of declining contract activity and just slap it in the face. Will the sales price continue to increase throughout the year, or will it dip eventually? Now we go to inventory in the Las Vegas Valley. July shows up at 6,591 units, an increase from 6,287 units in June. July of 2021 displayed 7,584 units being available, which is a decrease of 993 units year over year. Inventory still pales in comparison to last year, but the month-to-month gains still continue to increase, continuing the trend that started in May. Now, we're still in an environment of low inventory, but the size of the monthly increases are growing and the annual differences are decreasing in size. This is a relieving behavior to see if you're planning to buy in 2022. We now cover pending transactions, where a seller accepts a buyer offer and the transaction goes into escrow. July sits at 46,378 units being under contract, marking a decrease of 1,459 less units being under contract compared to June. July of last year had 51,040 units under contract, which marks a decrease of 4,662 less buyers getting their offers accepted. We go from pending to a final stage of an escrow, which is closed transactions. Simply put, these are the amount of home transactions that finish escrow and transfer home ownership to the buyer. July clocks in at 47,825 units closing, marking a decrease of 1,658 units when compared to June. July of 2021 sat at 51,060 closed units, showing a decrease of 3,235 less units closing year over year. We now go to our final stat, which is median days on market, or in other words, how long it takes for a listing to go live on the market to an accepted offer. July sits at 9 days on market, which is an increase compared to June. Annual gains are still good though, where July of 2021 showed units being on the market for 11 days. If a seller puts their property for sale at fair market value, buyers should know that the property will not last long. First, let's make a general statement and follow it up with important caveats. We'll call these caveats key points. The general statement is, the seller market continues. You've heard this since 2020 and 2021, but the seller's market is supported yet again by low inventory, increasing sales prices, and a low amount of time a property stays on the market. Despite the declining contract activity numbers, we are still above the contract activity levels in February of 2020, a month before the pandemic, where the market was definitely a seller's market. News that the seller's market is continuing and that homes are maintaining strong equity sounds fantastic. However, there are key points to be aware of when evaluating current housing market conditions. The first key point is that pricing your home correctly is now vitally important if a seller needs a quick sale. Declining contract activity, mortgage rates being double of what they were last year, and inflation actually increasing when comparing May to June has eliminated the prospect of overvaluing the property and having buyers stampede over each other to bid at or above list price. If time is of the essence for the seller in their home sale, pricing close to fair market value will be in their best interest. Pricing close to fair market value will yield the shortest amount of days on market and the best chances of having a bidding war that benefits the seller. If the seller overvalues their property at the onset, buyers will be discouraged from even submitting an offer, especially since their buying power has already taken a hit due to higher rates and inflation. The property will sit on the market, and as time passes, a price reduction seems more and more likely. I'm sure you guys have seen price reduction alerts in your own neighborhoods and on sites like Zillow. This is where a well-crafted price evaluation from a realtor really counts, so the seller can start off on the right foot. The second key point is that even though contract activity is continuing to decrease at a faster rate, the inventory shortage was so severe during 2020 and 2021 that it is absorbing the impact of less transactions. In order to have a neutral balance between sellers and buyers, we would have to be at a 6-month supply. Estimates for the housing supply at the moment sit from 2 to 2.5 months at the moment. The third key point is that even though the Federal Reserve raised their rates by 75 basis points during their July meeting, mortgage rates should remain the same throughout 2022. According to Lawrence Yun, chief economist at the National Association of Realtors, the long-term bond market on which mortgage rates are generally priced has mostly priced in all future actions by the Fed. Article link in the description below. What this means is that mortgage rates should ideally stabilize around 5.5% to 6% for the rest of 2022. The only threats to this planned stabilization would be if inflation continues to rise and the Federal Reserve has to take more action to tame inflation by introducing higher rates. The Federal Reserve meets 3 more times in November, September, and December. The final key point is that since the buyer pool has been shrinking due to inflation and rate hikes, the buyer demand has cooled to the point that inventory has continued to increase monthly, something that first happened in May. If you're still interested in buying in the near future, this does mean less buyers to compete with, and you generally got more leverage in a transaction with a seller. Do keep in mind, if a seller prices their home close to fair market value, prepare for a possible bidding war with other buyers. Now, if you're hesitant about partaking in the housing market today, or you're simply observing from the outside, things to look out for are future inflation figures and, by consequence, future Federal Reserve meetings. If the remaining months of 2022 publish higher than predicted inflation figures, the Federal Reserve may continue aggressive rate hikes that may further increase mortgage rates. This would lead to an even smaller buyer pool and therefore a less prominent seller's market. Well, that wraps up July's market report. If there are certain stats you want to know about or want a specific topic covered, please do let me know. If you're curious about your property value and want a well-formulated evaluation, have questions related to buying, or just have questions in general, don't hesitate to reach out. If you got any feedback, that is also welcome as well. This is Oscar SanJuan with eXp Realty, signing off.